Hi folks, Larry Berman here, and here's what's on my radar this week. Well, looking into next week, the only thing that matters is the Fed and what they say about the supplementary leverage ratio, and called the SLR. So a year ago, the Fed gave special permission to the banks not to include the amount of treasuries that they hold on their balance sheet as part of their capital requirement ratios. Long story short, that expires at the end of this month. And the expectation is that if the Fed does not extend that, and we've seen a couple letters from some senators and from the head of the FDIC saying, no, you can't keep supporting the big banks in this way, they wouldn't be allowed to hold as many, well, they could still hold treasuries, but it would be a capital cost to them. So their inclination would be to sell treasuries. Who's going to buy all the treasuries that they've got to issue? And so pressure on yields. Secondly, for deposits they take in, that's a liability to the bank. And so that puts pressure on the ratios as well. And long story short, they won't have a choice here but to extend this SLR. So it comes a bit of a political hornet's nest. Whether they say that Wednesday or not is to be determined. If they don't say that on Wednesday, you're going to see the bond market break. And when the Fed says as long as it's orderly, it could get very disorderly for a couple of days until the Fed steps in. So that's a risk this week. Now, on my radar, looking at gold, it's a position that we've advocated for. The last 6 months has been terrible there. With the pressure on yields on Friday still, with yields pushing to new highs, we're seeing a much better behavior in gold. Very, very interesting. We've seen a tremendous move of the speculators come out of gold. We're seeing the hedgers cut their hedges. I think there's something very bullish happening here, and I think it's related to the SLR and the potential for the Fed to step on the gas a little bit more and for yields ultimately to rally in the next couple of weeks. So big week. There's nothing more important to me than that, and that's kind of it. So when we talk about what's the bull and bear pick of the week, there's not a lot here because the stress on interest rates has been bad for the large cap tech stocks. And we've seen huge volatility in those names. One way to think about it, I've talked about equal weight relative to market cap weight. You could look at an RYT, which would be an equal weight technology against a short in XLK, being short some of the bigger names and the Microsofts and the Apples that are still going to be subject to some regulatory scrutiny around, the too big and privacy, and that's coming too. So that's my trade of the week. I'm not wild about recommending it, to be honest. In fact, don't do it. but if you're looking for something to do in the tech space, because that's in the media right now, that would be one idea for you. It's got to be a pairs trade. It's not just being long one or just being short the other. It doesn't work like that. It's about getting some net gains overall by being paired up with someone, something that we expect one to do better than the other. So have a great week, everybody. I want to give a big shout out to Luke. Luke's the guy who makes me look good on these things and does the editing every week. So big happy birthday to Luke, and a message there, Luke, use the airbrush. Have a good week, everyone. Remember, follow me on YouTube and check the alerts so you know when we have new content out.